Think a price drop saves you big money? Not so fast. Home buyers are losing thousands just because they don't know about this one simple move. Most people, including some realtors, assume that getting a lower price is the best way to save, but not quite. A price drop barely moves the needle on your monthly payment. So what actually saves you big? A seller paid rate buydown. So today I'll show you exactly why the strategy can cut your payment by over $200 a month and why it's a total game changer. So price drop versus rate buydown. What actually saves you more? So what is a rate buydown? Let's break it down. A rate buydown is when you pay upfront to lower your mortgage interest rate. Let's say today's market is 7%. You want to lower it to a 6.5%. You typically have to pay extra at closing. But what if the seller covers it instead? Rather than negotiating a price drop, ask for seller credits to buy down your rate. Why? Because it reduces your monthly payment way more than lowering a purchase price ever could. So why a rate buydown saves more than a price drop? Here's an example. You negotiate a $10,000 price drop on a $400,000 home. Sounds like a solid deal, right? But guess what? Your monthly payment drops by just $60. But if you use that same $10,000 for a rate buydown, your payment could drop by $100 to $200 or even more per month. So why is that? A price drop slightly lowers the amount that you borrow, but a rate buydown lowers the interest on the entire loan, which means bigger monthly savings and way less interest paid over time. So let's look at the numbers. So option one, a $10,000 price reduction. Home price, $400,000, and it goes to $390,000. So monthly savings for the $10,000 that you save on that list price, only $60. Option two, a $10,000 seller credit for a rate buydown. So the home price is $400,000. There's no change to that. But the monthly savings on this option is $100 to $200 or even more per month. Just depends on the market at that time. It would save you $40,000 in interest over the next 30 years by buying the interest rate down, let's say 1% from that $10,000 seller credit. And again, that's on the seller's dime. So that's real money saved, not just a slightly smaller loan balance. So what about a 2-1 temporary buydown? If you plan to refinance later or want a super low payment up front, a 2-1 buydown could be even a better move. So here's how it works. On year one, your interest rate is 2% lower. Year two, the rate is 1% lower. And year three and beyond, you go to your normal rate. But ideally, you'll refinance before then. And the biggest benefit, it gives you huge savings up front, helping with moving costs, renovations, or just making homeownership more affordable in the beginning. And the best part, the seller pays for this too. And if you refinance early, you get the difference in that account credited directly towards your loan amount so you don't lose it if you refi early. How to negotiate a seller paid rate buydown. Some buyers hesitate to ask for seller credits instead of a price reduction. But here's the thing. Sellers want to sell. And if they know they can help you afford the home more easily by offering a credit instead of dropping the price, they're way more likely to say yes. So as a buyer, you're in control. So use seller credits to buy your interest rate down, to cover part of your closing costs, or reduce your monthly mortgage insurance, or a little bit of all the above. And here's a pro tip for realtors. If you want your buyers to afford more home, negotiate a seller paid buydown instead of a price drop, because that lower payment with that lower rate paid by the seller will just only let the buyer afford more of a home. So who should use this strategy? The strategy is a total game changer for buyers who want the lowest possible monthly payment, realtors looking to help their clients afford more home, or anyone in a higher rate market who needs a lower payment. So before you ask for a price reduction, let's talk some strategy. I'll personally run the numbers for you and show you exactly how much home you could afford and how much you could save by doing an option just like this. Like and share and subscribe for more home buying tips and mortgage hacks, and I'll see you in the next one.